Yo, welcome back to another trade breakdown. This trade breakdown was on EU. If you don't know me, I trade Forex and I also trade gold sometimes. I can't lie, I didn't actually enter this trade that I'm about to break down, but I'm still gonna break it down to you because I called it. I just didn't enter the trade because I'm a bit stupid in the head. I just missed it. I was on the charts and I was also out, so yeah. But I'm gonna break it down anyways because it was a very clean, beautiful trade, and I'm very happy to see a trade like this because market conditions have been really shit, and we're now like starting to see market conditions becoming like normal again, like post like it was before the whole Donald Trump election shit. But yeah, super excited. I know I didn't take this trade, but I know that I could have taken this trade, so it makes me really excited for the month to come. I feel like there's gonna be beautiful opportunities and it's going to be a good trading month. But other than that, let's just jump straight into the breakdown. Okay, so starting off on the 4 hour time frame. Okay, so starting out on the 4 hour time frame, what do we see here? So first thing we see is a break of this structure, and then we see a pullback, and then we see another break of structure right over here. This tells me that this zone right here is my strong low, and I'm going to be looking for longs unless this strong low is broken. Next thing I do is I go down into the 1 hour time frame and I draw on my Fibonacci tool. Cool. So this was the break of structure right over here. Let me make it thicker so you can see right there. That big black line was the break of structure. So I drew out my supply zone. What caused this break of structure? And that was this push down before the push up. That's what caused this break of structure. And a lot of you guys will be thinking, oh, why isn't it this push down before the push up? And the reason it's not this zone and it's this zone is because this big impulse up means there was no liquidity in the push up. Whereas because of this pullback before the push up, we can use this as liquidity, which strengthens this area of demand. So why did I draw on the Fibonacci tool? I drew on the Fibonacci tool to see if the retracement was deep enough for me to consider a valid retracement. And as we can see, it wasn't only just below it wasn't only below the 50%, it was below the 618. And in fact, it went all the way down to 78.6, which means it was a very deep, strong retracement into this demand zone. And that's another reason that I was super confident in this POI. Okay, so after that, I go down into the 15-minute time frame. On the 15-minute time frame, here's what I noticed. First things first, this liquidity was swept right over here. Bang, right over here. Because this liquidity was swept and then we saw a push up breaking market structure, I know that this zone is even stronger. So what do we see? We see consolidation being swept, and then we see a big push up towards the upside, breaking market structure. Cool. Now let's take our focus to the demand zone that we drew on the 1 hour time frame. And what do we see above this demand zone is all these equal lows. So much liquidity, so much resting liquidity. And what did market do? It came down, it took out all this liquidity, came into this area of demand, and then it started pushing higher. Cool. So what about entry? Now you might be wondering, aren't you meant to wait for a change of character before you enter? Which is true, but because of all this confirmation where we swept liquidity before the push up, there's so much liquidity above this demand zone, I was willing to take the risk. Well, I would have been if I was at home to take the trade, but I would have been willing to take the risk and enter off of this demand zone. So how I would have entered was just a simple 1-to-2 risk to reward ratio, with my stops under the demand zone targeting a 1-to-2, which is about right over here, somewhere like that. Maybe a bit more. Bang, just like that. I still trade basic risk to reward ratio trades, like 1-to-2 risk to reward ratio trades or 1-to-3 risk to reward ratio trades. I don't really do the trades where I'm targeting anything because I feel like I'm not that good with trading yet for me to be able to know what I'm targeting. So I just stick to simple 1-to-2 risk to reward ratio trades. And I recommend that for you guys as well. If you guys are new to trading, just stick to simple 1-to-2 minimum 1-to-2 risk to reward ratio trades. And then once you start to get better, then you can start looking into targeting different highs or lows. You could have even refined it on the 5-minute time frame to this 50% body candle right over here. So you could have gone boom, boom, bang, and then taken a trade off of here if you wanted to. If you guys enjoyed, took away some information, learned something from this video, and if you did, don't forget to subscribe. Also, if you guys are interested in one-on-one coaching, I do one-on-one coaching where I take your trading to the next level, or if you're a beginner, I take you from a complete beginner to starting to make money off of trading. But not only that, I also take you on a complete tailored just for you self-improvement journey, because I'm a strong believer that when it comes down to trading, it's not just about how you perform on the charts, but it's also how you perform outside the charts in your day-to-day life. So if that sounds interesting, click the first link down below in the description, fill out the form, and you can apply to work with me there. If not, you can always just join my free Discord as well. There's a bunch of value in that Discord server as well, so make sure you join that server. But other than that, I hope you guys have a wonderful rest of your day, and I'll see you in the next one. Peace.